Hello, welcome to this week's How's the Market, Pensacola. Well, it is the second week of January. There's a lot of things happening around the country and around the globe, to be honest. But I'm going to just not even go into politics or all the craziness going around the country. I want to talk about finance and real estate because that's what this is all about. There's two things I want to bring up in my arena. One, part of the last packet that came out, stimulus packet, whatever you call it. I don't know if you got your $600, which is supposedly make all the difference in the world for all of us. And part of that package had a $25 billion earmark for landlords and tenants. What does that mean? That means that if you're actually behind a little bit, there's going to be a process coming. Florida's going to get a bunch of that just because of our population. There's going to be some money coming to actually catch up on the rent. I've talked to a couple of landlords. I have been very, very fortunate. All of my tenants have not been caught up in this. So we're just clicking along like we should. But I've seen a lot of friends of mine and a lot of clients of mine that there have been some that have been in trouble. They've been working with them and they're trying to work through things. So I told them about this. They said, okay, there's a way to apply. It may catch up some. All right. And I know my clients have actually been working with the tenants, especially if things are going on because, well, it's really not much you can do if you're told you can't go to work. So there's a lot to it. There have been some people that I know of that have taken advantage of this and just stopped paying completely and have no intention of ever catching up. They're just pocketing the money for now. You will be evicted. That gravy train will come to an end and that will wind up going to an eviction. And I promise you, anybody calls to check up on it, on how you did during this, if they say, they just stopped paying and said they wasn't going to pay because I couldn't kick them out, that's not going to be the best of references. So I'm not talking about the downside. I'm talking about the upside. $25 billion for the country. I read an article today. It said South Florida is looking at getting like $1.6 billion of that, and it wound up being like $6,000 per tenant. So that's one good thing. The other thing that has happened that I would be neglect not to bring up in this week's is on the 6th. So what is that? 6 days ago. The 10-year Treasury note went over 1%. It's been under 1% for, I can't remember when it wasn't. It's been a while, all right? I can't remember when it dropped back down to that, but it went over 1%. What in the world does the 10-year Treasury have to do with real estate? Well, a lot of the 10-year Treasury note is what actually is a buoy for the mortgage-backed securities market. And without getting too technical, basically as investors come in, if they can get 1.06 or 1.05 or whatever for their money sitting in a Treasury note, which is considered one of the most safest investments on the globe, they don't have to take the extra risk of investing in mortgage-backed securities. So as that Treasury note rises, you're going to see mortgage rates start to rise. Because in order to get money to fund these mortgages from the market, you have to give them a little bit of extra interest. You got to give them interest on the money. So that's going to wind up making our mortgage rates go up. I don't think they're going to go up drastically anytime soon. But the fact it went over 1, go back and listen to my last 10, 15 shows. I've been predicting this for a while. It will go up. Mortgage rates will go up. So it's really a good time to kind of lock some stuff in. And I know we got inventory problems. We're going to talk about that here in a minute. It's really a good time to lock some stuff in. I've got a couple of clients I'm working with right now that are actually breaking leases, paying the break lease fee that was quite steep. But they want to be able to lock this in. They're just kind of figuring that as a short-term pain in order to get in on the rates where they're at right now. I have never personally encouraged anybody to break a lease. That is a decision you need to make on your own. I kind of find that unethical. I know there are some people in my world that recommend that all the time, but I find it slightly unethical, especially since, you're going to be using me as a realtor or a loan officer or whatever. Anyways, there's the news for you, but let's actually dial in to just our two counties and take a look at this ridiculously low inventory again. I'm waiting for that spring buying inventory bump to come up, but I don't know. Take a look at this. Let's go. All right, if you've never seen the show, I always started off with this slide right here. It says if we have between 6 and 7 months worth of inventory, we have what's called a neutral market. Anything greater than 7 months is considered a buyer's market. Anything less than 6 months is considered a seller's market. What the slide does not say is anything greater than 9 months is considered a hyper buyer's market. Anything less than 3 months is considered a hyper seller's market. Can you tell I've said that once or twice? Let's take a look. We're going to start over here at Escambia County. And just like last week, everything up to the ultra luxury of $700,000 is a hyper seller's market. If it's the first time you're watching the show, over here on the left is where the prices are. On the right are the month's inventory. So that makes that first slide make a little bit more sense. 700,000 plus, you got 4.5 months. That's slightly creeped up a little more. All right, I know I've got a couple coming in that price point, so that may creep up. The appetite's still there. We got a lot of folks moving from New England down here, even to our area. I know a lot of people think, well, they're moving to Florida, so they're going to be moving to Tampa, Orlando, Miami. I was down in Key West a couple weeks ago. I've seen a lot of that too. But we're seeing it here as well. So what still makes me nervous is this first-time homebuyer. 100 to, what is that, 250? So 100 to 150, 150 to 200, 200 to 250. If you look at the inventory, all of those are under 1 month's inventory. The 350 to 400, under 1 month's inventory. That 250 to 350, that's 1.4 and 1.1 months worth of inventory. So we're seeing an inventory crisis in both counties. Wait till we get over to Santa Rosa, I'll show you some more. But it's just ridiculous. We don't have enough inventory. In Escambia County, all price points, there's only 454 properties active. Just so you know, normally that's somewhere between 1,500 and 2,500. If we look, go back and look at my show 2 years ago. You'll see the numbers. They're there. That's why I did this show, so you can actually see this. I want to be able to document how this market ebbs and flows. Right now, there's been times, if you listen to my podcast, and you can find it on iTunes or you can actually find it on YouTube, I called it 5 Minutes in Real Estate. And I was doing just an audio. I was not doing these numbers, but I was doing an audio. You can hear me back in 16, 15, when I was saying, this is buyers need to take advantage of this market because we have inventory. You have choices. And it's more of a buyer's market or a neutral market. Right now, sellers need to take advantage of this. Now, one of the things I highly recommend you do is have a game plan of where you're going to go. Because if I accept a listing, then I'm going to sell it. It's going to move. And what I do not want, and I've seen some of my competitors doing, is people selling their house and not having a plan of where to go first. All right. Is there a time where you may be homeless? Yeah, could be. I don't want that to scare anybody from selling their home. No, if you have a plan, then you don't have to fix, or you don't have to deal with that. All right. I sold a house, was it 2 months ago? And I asked the question because I've been asking that question for 6, 7, 8 months now. Do you have a plan? Do you have a plan? When I come in and do what I'm supposed to do you have a plan? And they told me, they said, yes, we just got that RV. We plan on living in that for about 4 months until we find exactly the land we're looking for. Okay, that's a plan. That's a plan. Don't think with these type inventories, if we price this property right and we market it right, price and marketing are really your biggest two items right now as a seller. You do not have much inventory. Rates are still low. Price and marketing is your points. So as long as we price it right, and you can push these. Look at these numbers right here. You can push. You probably have more equity in your property than you think you do. So you can push that some. If we do that, it's going to sell and probably sell fairly quickly. Let me see if I can talk. It will probably sell fairly quickly. So you need to have a plan on what's next. Exactly what's next. I'm starting to see bridge loans come about more and more and more. And I'm not really going to go into those, but basically it's where you bridge between owning one house and buying the other. And then you pay it off a little bit when you sell this house. But there's a lot more to it. That was definitely the 5-second version. But I'm seeing those more popular. Have the plan, but at the same time, if you're even considering a move, let's talk. Because my goodness, look at this. We haven't even got over to Santa Rosa County yet. Watch this. Let's jump over there real quick. The 200 to 250 properties, 0.4. Remember in Escambia County, where it was 454 total properties active, Santa Rosa County, there's 287 total active. And as you can see on the right, there is no buyer's market, no neutral market. Everything is a hyper seller's market. It's not even a seller's market. Everything is a hyper seller's market. 0 to 50,000, there is nothing in Santa Rosa. What was it in Escambia? There's 4, and I have 2 of these listed myself. So there's 4. Over here in Santa Rosa County, there is nothing. Look at that, 100 to 150. If your budget's between 100 and 150, there are 2 houses. 2. And you say there's not an inventory crisis. There is an inventory crisis. Between 50 and 100, there is 1 property active. Uno. That's it. Between 150 and 200, there's only 21 active. Now look, there's 56 pending. So it shows you the appetite there. These are the price points that are really, really getting a lot of activity right now. And I'm seeing not just investors snack them up. These are your first-time home buyers trying to get in on some of this stuff. They just have a lack of inventory. So that's the market right now. It is crazy skewed towards the seller. It really is. The market is crazy skewed towards the seller right now. So as a buyer, don't let that discourage you, because what you have in your favor is interest rates. I've had people come to me and go, I can pay cash for these properties. And that may work, but at the same time, sometimes you have to pay cash. And this is a different strategy I'm just going to expose here on the show. Sometimes you have to pay cash in order to win because you've got multiple offers and a cash offer is stronger. But I'm telling people almost immediately look at getting a cash out refi. You cannot do 100% as a cash out refi, especially if you just bought the place. And the appraisal is going to be what you purchased it for. But can you get 75, 80%? Yeah. And with the rates in the 2s, you would be silly not to. There's no reason to sit that much equity in a well, I say there's no reason. There are sometimes there's a reason. All right. So I don't want to say no because I'm not that guy. I never say never at the risk of sounding like Bieber. I don't say never, but there's usually not a reason to keep that much cash tied up in your home, when in actuality you can put it to work in other areas. I've seen people go and get an equity line, 70% or 75% home equity line on their home, and then come to me and say, hey, let's find a flip or some other type of investments that I can pull equity out, make the investment work. Then when we sell or when the investment pays off, I just pay the equity line back off. Because interest on your home mortgage is still tax deductible. That's a whole thing. Talk to the accountant. I'm not an accountant. I'm not an attorney. Yada, yada, yada. There's my spiel. Anyways, let's get back to this. If you are looking at doing anything this year, anything, give me a call. Shoot me a message. Let me know. All right, because we've got inventory problems. I'm having a lot of conversations with people about decisions on should I do something this year, and it really kind of depends on what you're trying to accomplish. You will hear me say that when we talk. Tell me what you're trying to accomplish. Not necessarily, hey, I want to sell this and I want to sell it for this price and I want to make this. What are you trying to accomplish? What's the why behind this move? And if you know that, then I can actually help you develop a plan to accomplish that. Remember, real estate is just a tool. Real estate is just a tool to help you accomplish what you're wanting to accomplish. When we're talking about your home, there's an extra layer to that tool, but it's still just a tool. It's still just a tool for you to use. So that's it. Man, it's going to be an interesting month, isn't it? Thanks for watching. Have a great week. I'm a man on a mission. My mission is to help people break through all the noise out there and don't need no permission. I want to help you get to actual truth. Don't you just want the truth?